That survey, 30 billion for 9 months, ending in September. Is that close to your forecast?
Look, surely that seems consensus from the conversation we have with clients. My personal impression is that the ECB will try to avoid that cliff effect from 60 to 30 in the first quarter. The first quarter of next year will have a lot of events, more uncertainty on global growth. We'll have Italy holding an election. And that seems to me quite a steep drop in the pace of monthly purchases. Consider also that the ECB estimates that the flow effects from these purchases are pretty high. So the presence of the central bank in the secondary market, in their opinion, is one of the important factors keeping financial conditions easy. So what to do? We have the view that the more likely outcome will be a linear tapering, so we go from 60 all the way to 0 throughout the course of the year, or maybe a more ladder-like profile.
Is there an end date? Do they give an end date? Is it risky giving an end date?
Right. Well, I think an end date is necessary to appease the hawks within the council, but that end date could obviously be left as an intermediate stop, as they've done so far, right? So December is now September, according to your consensus, and September could be provided that the situation has improved by then.
Yeah. Does it tweak other measures? Does it, because of the scarcity of various bonds, does it decide to buy other types of bonds or more variety of other types of bonds, corporate debt, for instance?
Yeah, so two things here. Related to the first point, I think we have to consider redemptions. Redemptions really kick in earnest towards the second half of 2018. So if you think about the logic that I was discussing, so the presence of the central bank, you probably want to have net purchases decline slowly initially in order to allow the redemptions to kick in and maintain a profile for gross presence of the central banks pretty even in the marketplace. Secondly, you say, okay, there's this issue of scarcity primarily of the German bond market. Now, I think about that mostly as a relative value trade. So probably in some maturity buckets, the ECB, the German Bundesbank, has exhausted the 33% cap on what it can buy. So it could redistribute these purchases in other parts of the curve, or it could lend that quota of purchases to other central banks, which, by the way, it's what has been taking place over the past several months already.
Given